So this hidden property tax is basically how the government's taking up to 62.5% of gains. So that's what we're going to be looking at today, is how it's called Victoria's Windfall Gains Tax.
Yeah.
So we're going to really be explaining that. It's a tax that not many people know about, and it's a bit ridiculous in my opinion.
The reason that this Victorian Windfall Gains Tax is so significant is because it's taxed on unrealised gains.
Yes. And
so they can actually give you the tax bill without you selling a property, without you having the capacity to pay that back. You're getting a $100,000 tax bill on land value that has just increased because the government decided to rezone your land.
That income gets added to your taxable income.
Yeah.
It's crazy.
Yeah, I mean, federal government loves taking taxes from you, but then the states come in and take their portion as well. But the reason that this Victorian Windfall Gains Tax is so significant is because it's taxed on unrealised gains.
Yes. And
so they can actually give you the tax bill without you selling a property, without you having the capacity to pay that back.
And you have zero control.
You have zero control.
So basically, in summary, what it is it's a tax from when the government rezones your land.
Mm-hmm.
So let's say they rezone your land and it results in an increase in value of your land.
Yep.
So something that's completely out of your control. Then if you gain from that, and it's a gain that they determine.
Yeah.
So if you gain from that, they'll then tax you. So they send you a tax bill.
Yeah.
So essentially, they're creating, in my opinion, a gain for themselves and then taxing you for it.
Yeah.
So
to recoup costs through tax.
but they're rezoning. Let's be clear, they're rezoning it for their own benefit.
Yeah.
They're not rezoning it for your benefit.
Yeah.
So,
and for a specific example, I mean, it's not taxed on the entire property value. It's taxed on the land component.
It's on the gain.
But say if you've got a $200,000 land value, which is very typical for, an average residential house, probably even more. If they rezone that from low density to medium or high density, and your land value goes from 200,000 to 400,000, then they can tax you up to 62%. It's a marginal tax bracket,
which we'll go through.
But there's There's essentially, if they're splitting it in half, 50% gain on that amount, you're getting a $100,000 tax bill on land value that has just increased because the government decided to rezone your land.
That income gets added to your taxable income.
Yeah.
It's crazy. So we'll talk a little bit about the government's perspective. So obviously the government's perspective is that they don't want people to dramatically gain from stuff that they haven't earned. So that's their exact wording.
Which is,
they want to...
You have earned it because you've gone through the risk to buying the property.
That property. Yeah. And in a lot of cases, you've bought a property in an area where you were hoping that this was going to happen in.
Exactly.
And that's what smart people are doing, or some people are doing,
You're
is they're buying in
money
areas
where infrastructure is, population's growing.
Correct.
Which is typically susceptible to high density zoning.
In the hope that it does get rezoned. And then in this case, they're saying, well, we've decided we're going to rezone this area. You've benefited from it, so we tax you. How dare you? So basically they're saying that the reason they've done this is to prevent property speculation, so people buying in areas in the hope that they're going to gain on it. I have no issue with that.
Which is what you're doing.
What's the issue with that? So let's break down exactly what this land tax or what this tax is. So it's only applicable if the increase is more than $100,000. So
it's up to 62.5% on the portion between $100,000 to $500,000,
and then 50 above
and then 50 above the $600,000 mark.
Yeah,
which 62.5%, that's crazy.
So yeah,
but even 50% on over $600,000, over the $500,000 threshold. I mean, if your property value is increasing by, say, even $100,000 over the $600,000 threshold, it's still a shitload of tax that you're paying on that portion of gain.
Well, in this example, so if the rezoning increases your land value by $600,000, the first $100,000 is tax free. Then the next $400,000 is taxed at 62.5%, and the remaining $100,000 is taxed at 50%.
That's crazy.
That's a lot.
That's a lot of tax. And on top of that, I'm not sure if people are familiar with the land tax thresholds, typically speaking, in Victoria, but you pay land tax in Victoria from $50,000 land value, which is basically any property that you purchase.
Yeah.
In New South Wales, the threshold is $1,075,000. So you're already paying land tax before you get potentially hit with this windfall tax as well.
Yeah, taxed to the absolute. So there is cases where this doesn't occur. So obviously, normal market growth, you're not paying for that, any renovations or anything that you've done. It's only as a result of rezoning, which is pretty clear. There are certain exemptions and specific land uses, public land, smaller scale rezoning. And you can, in some cases, this isn't always guaranteed, you can defer that payment until the property is sold.
Okay.
So you're basically ticking it up.
And you're probably getting charged some sort of interest rate on that.
And you'll also pay capital gains tax, and or depending if it's an investment or not.
Yeah.
So yeah, there's a lot to it. So I think if you're a landowner in some of those outer corridors, which we do know over time do start to get rezoned as the growth pushes to the outer suburbs, there's a real risk that some of these people are going to start getting tax bills.
And we've seen all of that happen. There's a lot of cases where the building heights are capped in a lot of these areas, so they are expanding the city out. Craigieburn and Melton and all of these suburbs that we keep mispronouncing on the podcast.
Yes, get into us if we've said that wrong.
All of these areas, I mean, you would say that farmers get hit with so much, but I would say that a lot of farmland is susceptible to this rezoning
100%.
because it could be, the land could be zoned for anything non-residential, even, an environmental conservation zone or something like that, which the land value going from environmental conservation to potentially, low density residential or medium, that's a shitload. It's going to increase.
And we talk about people developing, and starting to, promote that and create supply. Yet here we've got a government saying, you do that and I'll tax you.
Yeah.
Don't you speculate where you should be buying in the hope that we rezone it and then you build some medium density housing and rent it out. If you do that, we're going to tax you.
It's like we need the supply.
Yeah.
And we spoke about it on podcast 1 or 2 ago. We need private investors pushing that capital into developers' pockets to try and stimulate supply.
Yeah. So, look, practical takeaways. I don't think there's much you can do.
No,
to be honest.
Apart from avoid Victoria, but that's a.
How do you do that? If you're living there, but it's I don't know. It's one of those things where I think it's just a cash grab, in my opinion. They're saying, well, you didn't earn that increase. Well, neither did they, really.
No.
They didn't earn that tax, did they? All they've done is rezone something.
Yeah. And, I mean, they've rezoned something because it's got to a critical point where they think it's deserving of higher density.
Yep.
The reason it needs higher density is because there's existing homeowners in that location.
But then they're getting more
providing
rates.
Economic value.
And they're getting more rates.
Exactly. Yes, the landowners should be exempt of this completely because they're the ones who have created demand for that market for you to rezone it.
Yeah, it seems ridiculous to me, but
it's crazy.
It's Victorian government again.
Yeah.
Throw it in the comments what your thoughts are on this. I'd love to hear what people think of it.
If anyone has been hit with the tax as well.
This is something that I haven't experienced with any of my clients, but I'd love to hear from people that actually have been hit with this tax or think they might be in the future. Throw the comments and would love to have a chat about that.
That's it for this week. We'll see you on the next episode.
Thank you.